This isn't a headline recap, and it's definitely not a doom and gloom session. What I want to do here is step back and look at what actually moved the needle in 2025. Not the noise, but the things that changed how property needs to be approached going forward. 2025 didn't feel dramatic, but it was decisive. This was the year where policy, lending, and behaviour lined up. And the message was clear. Property still works, but the amateur landlord model doesn't. The market started rewarding professionalism, not participation. The Renters' Rights Bill sat over the market all year. What's important isn't just the legislation itself, but how people reacted to it. We saw smaller and accidental landlords exit in real numbers, while professional investors repositioned. This legislation hasn't killed property, but it has forced decisions. Surveys from the big lenders among landlords say that 40% intend to sell over the next 12 months, and only 7% intend to buy. That's opportunity for us as professional landlords. If those numbers sound huge, don't forget that there are around 2.3 million landlords in the UK, and 45% of them own just one rental. So whilst 40% of landlords saying they are selling sounds big, it is not 40% of rentals going on the market. But why did they exit? Well, like Section 22 and the extra stamp duty and other government interventions, the Renters' Rights Bill may have been the final straw that has pushed tired or accidental landlords out. That move from incumbent to new landlords is natural, but the volume that people have exited has been far more than recent years. Section 21 now has a clear end date. From May 26, no new notices, and by July, it's effectively gone. The takeaway here is simple. Landlords must understand the new possession landscape or they'll get caught out. And if you want to sell, well, Ground 1A sounds helpful until you understand the restricted period. If a sale falls through, you could be stuck for up to a year, unable to relet, unable to put it through as a short-term rental. That means you're paying your mortgage, your council tax, maybe even double council tax, and all your utility standing charges. This is one of those changes that looks minor on paper but has big real-world consequences. The spring statement didn't come with fireworks, but it did confirm direction. There's no rollback on Section 24, no sudden capital gains tax changes, and no signals that the government policy was about to swing back towards landlords. This was a line in the sand moment, and the message was clear. Property is viable, but only when run as a business. If the spring statement confirmed the direction, then the autumn budget locked it in. No landlord tax reversals, no incentives for casual ownership, and a continued focus on tenant protection. There's now no ambiguity left. Property is viable, but only if you operate professionally. The budget was fundamentally redistributive. Higher taxes, no productivity growth plan, and little for investors. For property owners, this has translated into higher costs and tighter margins, especially when you own property in your personal names. Heading into 2026, this is the tightest environment that small landlords have faced. Higher income tax pressure, rising wage costs, and the end of any reliefs. The amateur landlord era isn't ending emotionally, it's ended mathematically. One of the biggest shifts in 2025 was psychological. Rates have stopped being the conversation. They didn't drop dramatically, but they have stabilised, and that has given people the confidence to underwrite deals properly again. When certainty returns, activity flows. The mortgage market quietly pushed investors towards long-term thinking. 5-year fixes became normal, speculation got squeezed, and lenders became more selective around APCs and asset quality. This has rewarded investors with strategy, not just a deal habit. EPCs, which have been spoken about for years, became a little bit more real in 2025. Even when governments softened the deadlines, lenders and valuers haven't. So brand discounts have become normal for the right investor. This actually creates leverage. The landlord sell-off, well, it was a transfer of stock from exhausted landlords to operators with systems, capitals, and long-term plans. And watch out for the big corporations like BlackRock and Lloyds, as they are after our buy-to-lets. But that is why opportunity still exists. Councils have got tougher in 2025. There's more licensing, more enforcement, more penalties. But at the same time, they became more reliant on the private landlords for supported living and temporary accommodation. So pressure on one side, opportunity on the other, if you understand compliance. Now, planning hasn't tightened nationally, but it has tightened locally. Councils have become less tolerant of poor HMOs and lazy PD conversions. Planning literate investors have thrived, but shortcut strategies haven't. By the end of 2025, growth was weak, construction was soft, buyer confidence was low, but rental demand has stayed strong because supply simply isn't there. That imbalance is the key theme. 2025 didn't kill property investing, it killed lazy property investing. It stripped out poor structuring, emotional decisions, and the one buy to let will do thinking. What has survived and actually strengthened has been investors with systems, long-term thinking, and clarity on their strategy. 2026 looks like a slow improvement year. Rates ease, financing improves, but growth really remains modest. Supply constraints don't disappear, and the landlord exits continue. The housing market is a thin market with low supply, cautious buyers, motivated sellers, and opportunities for those who are prepared. The wider economy remains fragile with high taxes, weak productivity, squeezed households. 2026 will be a transition year, not a boom and not a bust. And what that means, well, for different groups, experience this market very, very differently. Homeowners get gradual relief, amateur landlords feel pressure, and savers are quietly pushed towards investing. Capital is looking for a home in 2026. The biggest opportunities come from some of the stress points, the landlord's exits, the painful refinance, and then structuring retail units. And of course, there's opportunity with some of the regeneration zones. None of these are passive plays and they all require skill. But let's be clear, 2026 isn't going to be easy, but fewer amateurs means more space for professionals. This is the start of a new phase in UK property investing. The investors who win next are the ones who stay educated, connected, and collaborative. This isn't a solo game anymore. Going into 2026, the opportunity is still there, but it belongs to people who understand the rules of the game as they are now, not how they used to be. If you've found this useful, this is the kind of conversation that happens inside Property Wealth Club every month. Not just about property, but about business, mindset, health, and how you actually sustain success long term. Investing and building anything meaningful shouldn't be done in isolation, especially in a market like this. The right network makes all the difference. Property Wealth Club isn't about teaching the basics or chasing shiny strategies. It's a place for active investors and entrepreneurs who want perspective, what's working, what isn't, and why, and who value accountability and honest conversation. You'll be part of a private WhatsApp group that is club-led. Ask questions, inspire others. Each month we focus on a theme and bring in aspects from property, business, health, mindset, tech, AI, whatever you guys want to talk about. We have a book club to spark thinking and self-development, real discussions, market updates, live challenges that members are dealing with, and business ventures and how people are adapting in real time. It's not theory for theory's sake, just friendly chat, inspiration, and accountability. 2025 showed us that property still works, but only when you treat it like a business. Property Wealth Club is designed to support people who want to operate professionally. We'd love to have you come and join us at Property Wealth Club. We'll be kicking off in January with goal setting and vision planning. Come and join us. It's free for 1 month. Just scan this QR code, activate your free trial, and we'll see you in 2026.